Guys, we're going to get started here pretty soon. Just give a minute for some people to join. Um, Going over last week's short price action week, right? We had 3 full days of equity trading, and then market was closed early Thursday and Friday. So I only traded Monday, Tuesday, Wednesday. However, I know some people traded Thursday and potentially Friday as well for the holiday, but my week was good enough without needing to trade Thursday and Friday. So just going over Monday, Tuesday, Wednesday, regular trading hours. We'll start with Monday, and anyone who watched last week's video, the way we're kind of doing this is just looking at overnight price action, only going over 1 minute inversion setups, right? If you take 30-second, that's great. If you take order blocks, that's great. But just for simplicity's sake, what I think most people should focus on is 1 minute inversions. Once you have an understanding of the 2022 model, and then, once you're used to inversions on the 5 minute, the 15 minute, 2 minute, then eventually the 1 minute, this is where I think people should focus. So looking at price overnight Monday, right? We had a gap up on Sunday's new week open, and then we just ran straight above Friday's high, continued to rally overnight, right? Early hours Monday morning here, and then with the equity open here. So we have this, if we're looking at a compass, our understanding is that we're fairly high up in terms of where the daily candle is already. So we would favor shorts, or at least expect a move down before a move up. So that was our expectation going into Monday morning equity session. So this long lower wick candle here is the open, 9:30 Eastern. And what we have is a sell-off. We swept this internal low that was created just before the open. Price retraced all the way back up, right? Respected some fair value gaps here and here. Closed there, so no actionable entry. But what we did get was a tap of this fresh bearish 1 minute fair value gap. If you see here on 9:30 and 9:31, 1 minute candles, we tapped and significantly rejected this fresh 1 minute fair value gap. So that kind of gave us a clue that price is, seeking some downside liquidity, right? This was not enough right here. So with that in mind, we get that reaction, 9:31 candle, close at its low, right? We close below this low that was just swept. Continue to displace downward. We form another bearish 1 minute fair value gap here. Price kind of softens a bit. We start seeing some wicks here. Finally, we get an up close candle here, the first one of the day at 9:36. So now we kind of have our range established, right? We have a swing high, swing low. And with that, we draw our fib. So 9:30 high is here. 9:36 formed a swing low here. This becomes our equilibrium, right, of our equity hours range so far. What does price do? We get a move up. We tap into this fresh 1 minute fair value gap. We go just above equilibrium, right? So any area above this blue line is a premium of this range. So longs are going to be exiting and shorts are going to be selling. We get exactly that, right? So bodies pretty much respecting equilibrium, and a quick rejection of this fair value gap, right? Price didn't spend any time above it, and it obviously didn't close above it. So once we have that, we get an initial push down into this fresh 1 minute fair value gap. And the reason this is highlighted orange is because this will become an inversion. But we push down into it. We respect it 3 times on these 1 minute candles. And price is just bouncing back and forth between these imbalances, right? And finally, we get a strong close below that bullish fair value gap. So that becomes a bearish inversion. So with all of that context, right, we understand that we're higher up in price relative to overnight hours. We have a downward trend established, right? We tapped a premium. So that's, overnight context, downtrend, premium tapped. We have a 1 minute fair value gap bearish that's holding, right? And then finally, our entry is a inversion of a bullish fair value gap, right? That's our bearish confirmation. So a lot of confluence is there, despite this being a 1 minute setup. So what does the trade look like? In this case, we're selling at the close, right? And this dashed line at the bottom here, this is some relative lows. So this is our higher time frame liquidity, right? If you pull up an hourly chart, these are probably hourly lows. So this is what price was seeking. And you notice when we eventually did sweep that, we reacted. So that is our downside draw, right? That's not necessarily where we're going to be taking profit, but that was our draw. So for me personally, I took profit on this trade at this swing low, getting about 10 points. And my stop was just within this 1 minute order block, right? You always want to ask yourself, what can defend my position, right? What fair value gap, what order block, what other PD array can defend my position? Now for me, on a high context setup, I'll take a negative risk to reward, right? So 0.72 on this. But that comes from the understanding of my win rate being relatively high on a setup like this, right? When there's higher time frame narrative and there's lower time frame precision, with the strategy that I teach and you know that we've grown together as a group to love, you can sometimes get an 80% win rate, right? Especially when you're taking A plus setup. So don't be scared of a negative, well, not negative, but a sub 1-to-1 risk reward ratio. As long as you use it with discretion, right? You can't be taking every single setup you see and having a loose stop. But all of that said, right, stop being protected by this 1 minute bearish order block. We also have a freshly formed 1 minute fair value gap here. Hopefully you guys can see it by now. I don't need to be drawing every single fair value gap out for you guys, but sell at the close, we experience some drawdown, but this fair value gap and this order block hold just as we expect them to, and we get out for 10 points of profit there. Now, if you guys like to hold trades for longer, or if you just had more conviction, you could have held to those lows, and that would have been fairly painless, gotten about 20 points there, but for me, I'm out at that, the swing low here. So that's trade 1 on Monday. There's some of these drawings up. Next trade, gotta mess that up. Not sure why that happened. I think I switched time frames. Yeah, there it is. Okay, so next trade on Monday was another short. What ended up happening was price kind of got choppy here, right? Not a lot of displacement on the 1 minute. We had this failed 1 minute inversion here, but you know, bearing in mind higher time frame context, we had already swept those lows that we were looking at, so no real point in taking that, especially with this sort of trendline liquidity here. Price moves up, eventually sweeps this high, right? So we get a internal buy side sweep there. Come down and eventually inverse these two bullish fair value gaps, and this was a valid short selling at this close, right? Exit at this swing low, right? So we have that bearish sweep. We have a decent amount of lows here to target. This, I would argue, is not as high quality as the first short we took, but it's a decent setup, right? Especially for what was given on Monday. Just over 1.3 risk reward ratio here. Again, what's defending our short position? This freshly formed bearish 1 minute fair value gap. And then this 1 minute candle here, which acts as an order block. Stop at the swing high and TP at this swing low here. So that's Monday. Going forward into Tuesday. If you guys are new, I mean, I generally take, you know, although we are scalping the 1 minute and sometimes the 30-second, we want to stick with quality, right, over quantity. You don't want to be a machine gunner, especially when, you know, you have a high frequency rate of signals. You really want that discretion. So, you know, set a daily P&L goal for yourself. If you have a 50K funded account, maybe you want to go for $250 a day. Once you get confident there, maybe you go for $300-400 a day. Set that goal, you know, size accordingly, understand your drawdown, right? And stick to A plus setups. Right? So, you know, if you're trading one mini, you would be up something like $350 on Monday. Now Tuesday, this was a disgusting open. So I have this little thumbs down here. Super choppy open. Price wasn't even, you know, this isn't even seek and destroy price action. This is just kind of consolidate and let wicks do the damage. So what do we get? Overnight, we did not sweep Monday's high, right? Price pushed up, failed to break Monday's high, and gradually pushed down, sweeping Monday's equity low here, right? Didn't quite get up into Sunday's area, into the low of the daily candle, but we're fairly low, right, at the open. So we want to see some sort of move up before a complete sell-off. This chop was really shouldn't have been traded. I was able to catch a short here, just betting on, you know, this consolidation being ready to break. But the truly A+ setup at Tuesday's open was this long. So if you guys have watched 2022, if you've watched other ICT stuff, you understand AMD, which is accumulation, manipulation, and distribution. So that just states that price is going to accumulate first, right? It's going to take out as much liquidity in a range as possible, right? Getting buy stops, getting sell stops, and allowing institutions to enter their position, right? Enough time to do that. So that's what we have going on here. And accumulation is generally a tightening range. So you see we have lower highs and higher lows here. And then you have manipulation. In this case, it was to the downside. So this is just sweeping all of these sell stops here, giving institutions an even better price to go long. And then you have distribution, which was to the upside in this case. Now, I'm first going to touch on the long that was given. This was beautiful, textbook A+ long. There was a 30-second and a 1-minute entry. Now, you could have taken an earlier 30-second entry if you have conviction in the setup, or you could have waited for the upper 1 minute, right? So this lower rectangle, this lower inversion here was the first close that happened, but you see we had just tapped this fresh 1 minute up here. So let's say you get in at this upper 1 minute close, which is here. Wait for a retracement, right? In this case, you could have gotten an inversion for value gap retracement. So if you take this setup here, right, you hold till one of these swing highs, which are relative highs as well. And, you know, you have your stop, let's say, just below this volume imbalance, right, as your final defense mechanism. Get about 1.5 risk to reward. Fantastic for this system. And this is a setup that you should be taking every time, right? Anytime there's clear AMD, there's relative highs, so engineered liquidity, right? We know market wants to go up there, and you see it did so beautifully. You know, if you're in on this candle, you only had to wait about a minute, and you got virtually straight upside delivery. So that's the beautiful setup of Tuesday, right? AMD, 16 points. That is more than enough. Now, I want to show you my execution on this. So like I said, I was able to catch some of this short. So this is a 30-second. I'll maybe draw a border around it if I can. Maybe not, but bring it down a bit. So we have all of this accumulation, right? We start to get some displacement. And once the 30-second gave a clear bearish order block here, this is when I sold short and I was able to catch some of this move. I wouldn't recommend that trade to most people because it's not, you know, you are risking a continuation of that accumulation range. But price began to break to the downside. You know, with what I was seeing, I'm happy to take it. So that was my first trade. And then we have a beautiful rally here. So I was in after this 1 minute close. Right? One entry here, get an average price of about 803. Let price draw down a bit. Just needed to tap this fresh 1 minute for value gap. And then boom, we rip higher. I scaled out, right? I have too many, so I don't want to be risk on the whole time. You know, first entry about 802, get out about 813, so 11 points there. First entry, second entry, 804, out at 818. So, you know, an average of 13 points, something like that, with 2 minis. Great trade there. There were a couple of other setups here that I'll go over. Now, let's say you were victim to some of this chop, you might only be break even or partially green after this trade, then maybe you keep trading. But if this was your trade, that should be a one and done sort of situation for you. So over here, price declined a bit here, left equal highs, right? So again, engineer liquidity there. We get this beautiful 1 minute inversion after sweeping these lows. Now, my only problem with this close is that we're in a unmitigated, in other words, an open 1 minute fair value gap up here. So I wouldn't say this is A plus because of that. But the next candle, the following candle, closed far above it. And you could have played this on a retracement, right? Just having closed so close to this liquidity, that's where price is headed. Wait for it to retrace a little bit. Let's say you get an entry of 823, right? You could have got about 10, 11 points on this setup there. Obviously not as A plus as this 1 minute long, but still something. And then finally, for the morning session, we had this short, clearly low resistance liquidity, right? So price goes up, comes right back down, inverses 1, 2, 3 fair value gaps, with the final one being here. And then, if you sold short, you had this low and this low to target, and price went there fairly painlessly. Setup could have looked something like this, either out at this low or you're out here. And depending on that, your stop might be this candle high, it might be within this fair value gap. Either way, price went straight down, delivered to both swing lows shortly after. So that's Tuesday, right? Clean day again, aside from this chop. Just being aware of avoiding falling victim to accumulation, right? You don't want to be on the edge of accumulation or manipulation. You want to catch that distribution. So that is Tuesday. Jumping forward to Wednesday. This out for now. Wednesday overnight session. What do we have? Obviously, this is Tuesday's high. This is Tuesday's low. Price pushes up. We sweep this internal liquidity. Early London hours. Sell off. Sweep Tuesday equity low. So bullish bias going into the open, right, with that Tuesday sweep. Now, I did take a short. Why? Just because the lower time frame context was too good not to at least try. So we have this 1 minute inversion here. Small box there. That happened just after an internal buy side sweep. We have multiple lows down here to target. So these are resting sell stop orders that I would have wanted to target. Now, price did draw down, but we unfortunately reacted at this bullish order block. In this case, I should have de-risked. I should have gone break even. Price went 12 points in my favor, reacted to a bullish PD array. I should have gone break even. I didn't. I just kind of wanted to see first some manipulation occur before the bullish trend we were expecting. Didn't happen. That's all good. We fortunately got some great setups soon after. If I can find that drawing I hid. Here it is. So that was a failed short on my behalf. But shortly after, we got a beautiful 30-second. So this picture here is a 30-second chart. Beautiful long here. 30-second closes above this bearish fair value gap, right? Draw down a bit. All good. My stop is down here at the swing low. And then we rapidly just displace to the upside, targeting these highs. This gave me, need to look on this y-axis. So an entry of about just shy of 694 and an exit of about 705. And that is this candle here on the 1 minute. As you can see, there was no 1 minute opportunity to get in, just virtually straight up on this 1 minute candle. So that was one of my trades Wednesday. I had a couple of others. Let me try and find them. Here they are. So I'm gonna bring this window into view. So as you guys know, I journal all of my trades every single day. That was one of the, so you see 2 trades that I took. I had 3 more after that. So this was a 30-second order block. These are all on the 30-second. Right, I know it looks like a lot, but I'll explain every execution here. So 30-second order block setup, fresh fair value gap draw below, right? Price wanted to retrace after such an epic rally. So we catch that short, get about 10 points there. Price taps that fair value gap, reacts bullish. We have multiple highs above, gives a 30-second inversion there, right? Obviously, higher time frame trend is bullish. And then we get that long and scale out 2 minis there. Finally, the last trade, after sweeping both of these lows, digging further into this bullish fair value gap, we displace once, displace again, inverse this fair value gap on the 30, get a nice retracement entry of about 721, and I'm out at 728. So 3 trades here all have some different context, right? This first short being I'm trading the retracement, and then these longs, I'm trading the trend, right? All of them have valid context. It's just important to know which is which. And as you can see, just over 4 grand on the day on Wednesday on these 10 PAs with Apex. So I only traded 3 days, like I said, but still a fruitful week. You know, you guys need to really understand your model, right? Understand your EV, your expected value based on your risk reward, based on your win rate, and be confident, right? Stick to A+ setups. You know, the discipline is on you to not break your rules, and then you just need to be executing on A+ setups, right? And things will fall into place soon thereafter. But hope this was helpful, guys. I'll be doing this probably once a week, just weekly reviews in the Discord. Join us. You know, if you aren't already in the server, payout approved. It's free to join. Tons of resources, tons of good educators in there, and we want to help you guys get those payouts. So I'll see you guys next week. Be safe.